All right, welcome to the Explainer. Today, we're going to tackle a term that, let's be honest, can cause a lot of anxiety for business owners in India. And that term is tax audit. What is it really? Who actually needs one? And, what happens if you don't get it done? Let's get into it. So if you're out there running a business or you're working as a professional in India, you're going to want to listen up. It doesn't matter if you're a brand new startup, a family-run manufacturing unit, or a freelance consultant, there are some financial rules you've just got to get a handle on. And probably one of the biggest ones you need to wrap your head around is tax audit. Now, I know when people hear the word audit, their minds immediately jump to, well, trouble. But really, understanding what this specific audit is all about is your first step to making sure your business is safe, compliant, and frankly, a lot less stressful. Okay, first things first, let's clear up a really common point of confusion. You see, a regular audit, say for a private limited company, that's mainly for your investors. For the banks, it's to show them the financial health of the business. A tax audit, though, that's for a completely different audience. It's prepared specifically for the income tax department. So that brings us to our first big question. What is a tax audit exactly? Let's get to the heart of why this thing even exists in the first place. Probably the best way to think about it is this. It's less like a surprise visit from the financial police and a lot more like a mandatory health checkup for your company's finances. It's a process to verify that everything's in good shape. Not an investigation that assumes you've done something wrong. Now, if we get just a little technical, the rule comes from Section 44AB of the Income Tax Act. All it is an official review of your accounts by a chartered accountant. And the whole point? It's just to make sure that the income you've reported and the taxes you've calculated are accurate and that they play by the rules. Simple as that. And what's really interesting is this isn't some new thing. The tax audit requirement was actually introduced way back in the 1984 budget. The finance minister back then said its purpose was to make sure that account books were properly maintained and that they showed the true income. So you see, its real DNA is all about encouraging good financial habits. All right, so that's the what and the why. Now for the question that you're probably asking yourself right now. Do I need a tax audit? Let's break down the numbers, the thresholds. Okay, if you're running a business, doesn't matter if you're making things, trading goods, or selling services, the main thing you need to keep an eye on is your total sales, or what the law calls your turnover. For most businesses, here's the number you have to remember. 1 crore rupees. If your total turnover for the financial year goes over 1 crore, then bam, a tax audit becomes mandatory for you. But wait. Here's where things get interesting in our modern economy. The government really wants to encourage digital payments. So what happens if your business is almost entirely digital? You take payments and you make payments through banking channels. Well, that limit jumps up to a whopping 10 crore rupees. It's a huge incentive to go digital. But, and this is a big but, it only works if both your cash receipts and your cash payments are less than 5% of the total. You got to meet both conditions. All right, let's switch gears for a second. What if you're not running a business, but you're a professional? For you, the trigger isn't turnover, it's your total gross receipts. For professionals, the number is different. It's 50 lakh rupees. If your gross receipts for the year cross that 50 lakh mark, then you'll need to get an audit done. So who exactly counts as a professional in the eyes of the taxman? Well, it covers the ones you would expect, right? Legal, medical, engineering, accountancy. But the list also includes technical consultants, interior decorators, and even film artists, like actors and directors. Okay, so let's say you've crossed the threshold and you need an audit. What in the world does the chartered accountant actually do? Let's take a peek behind the curtain. The whole process isn't just a random check. It's super structured. The auditor's report is basically a huge statement with 44 different clauses, and it's called Form 3CD. Think of it like the official master checklist for the entire audit. You can really boil the whole thing down to 3 simple steps. First, your auditor goes through your books of account. Then they start verifying all the specific details to make sure you're compliant with the tax laws. And finally, all of their findings get put into that special form and submitted directly to the tax department. So what's actually on that checklist? Well, they're looking at all sorts of things. They'll check how you calculated the depreciation on your assets, they'll make sure you're complying with GST, they'll even look at any big loans or deposits you've taken or paid back, just to make sure everything's above board. So we've covered the what, the who, and the how. Now we get to the most important part. Why does any of this matter? What happens if you're supposed to get an audit and you just don't?
Well, it's not totally black and white. If you fail to get an audit done, it doesn't automatically mean you get hit with a penalty. The law actually recognizes that, stuff happens. So there are two paths. Either you have a reasonable cause for not doing it, or you face a penalty.
So what's a reasonable cause? Well, the courts have actually accepted things like your auditor quitting right before the deadline, an unfortunate event like a fire or theft that destroys your records, or even the death or serious illness of the main person in charge. It shows there's a human element to the law. But if you don't have one of those good reasons, the penalty is very clear. The fine is 0.5%, that's 0.5%, of your total turnover for the year. However, it's capped at 1.5 lakh rupees, so you'll pay whichever of those two numbers is smaller. And that pretty much brings us to the end. So when you boil it all down, a tax audit isn't something you should fear. It's just something you need to be prepared for. It's a fundamental part of staying compliant in India. So looking at your numbers, at your processes, the only question left is your business audit ready? Thanks for joining us on The Explainer.